Welcome to Trading Lounge and the European indices for Thursday, October the 13th. I'm going to move through pretty quickly. I've got a bit of financial license work to do at a particular time this morning, and I'm sort of locked into that particular time. So I'm just going to run through quickly. Very much like the S&P, of course, we've got the CPI figures coming out in about half an hour or so, so they could see the market a little bit volatile. Now the situation is that from the top here we've been counting down as 1, 2, 3, 4, and then 1, 2, 3, A, B, C for 4 and down for 5. Bit of an overlap here, so you could probably look at this in tighten this wave 1 up here, but this wave 1 here kind of fits in nicely with this low on the stock 50 here for this. So, but also this wave 4 here as 1 and 2 and 3 down here, this also overlaps here as well. I don't mind it too much. It's in the 5th wave. It's not like it's in the 3rd wave and that sort of thing. The other point here too is that the markets haven't really rallied from these lows back to their 50-60% mark. Could they do that? Yes, of course they could. So what we could say here in terms of our takeaway is that the markets haven't reached their 50-60% retracement level, and they could, but at the same time, because we were going from wave 1 here to wave 2 or wave 2 here down into a 3rd wave, and this 3rd wave will be longer than this leg coming down. Well, we'll take it from here to here, will be longer than this leg here. So we don't want to miss that. We can see that we've got 12,000 here. So we want to glean, you know, to be safe and to be sure, we want to, any break below these lows here, that would negate any move to the upside, I would imagine. I mean, it could be an expanded flat, but don't normally get them in wave 2 that much. So a small position here, let's just thin that line out there, and so half a position, quarter of a position, a third of a position, and then when the 12,000 here becomes the retested resistance with the first spike below the level, then work it back up from that low to that low and get your next position in on that side. So as far as the crow flies, we could look at this as wave 1 here, and we could look at this as wave 2 here. But don't get sucked into that, because we could still move certainly to the upside here to have this as, I won't go into it, but we can certainly have a move up here and then come down at that point. If it breaks 12,100, a small position, chill. It will be pretty rough around here. Plus, you've got the CPI earnings, and we've got US earnings coming in now as well. Goldman Sachs is coming in tomorrow morning before market open, I think. So this wave 3 here. So we want to basically, once we're below the 12,000 here, and it'll be, you know, vibrate around back above and below and all the, then start building in some solid positions over this side. Okay, so the takeaway is that yes, the market can rally because it hasn't reached its target areas. However, the market is pretty weak, so we need to short new lows. So short new lows, be mindful of rallies, don't overtrade above the 12,000. The EUROSTOXX, I feel like it's got a bit better of a pattern here in terms of 1, 2, 3, 4 here, sorry, and down for 5 here. Well, yeah, we could tighten wave 5 up and put it over onto this low here if we wanted to. Probably put it here actually, and then look at all of this as a corrective pattern, but it's sort of more like a wave 4 in that case rather than a simple wave 2, because wave 2 is normally simple and sharp. So once again, this market can certainly go to the upside here. The 3,300 you can see is the closest largest number for support. So yeah, I mean, shit, it could come all the way up here. There's nothing stopping it. It's just that it appears, you know, a bit soft at this point, but keep an eye on the Asian markets to see where they're heading. This could certainly head up here. You know, this 5 wave structure down here could be just part of something in here for all of that as well. So it could certainly go up there. So in this case here, we've got the 3-3 here. Just make sure that you know, when it comes down here, it's going to bounce off it again anyway, if it is going to go, you know, down from this point. So you want that first low below the level. That will keep you reasonably safe. And if you don't overtrade, you'll be able to survive any vibration. Once it's under this level, all of this here becomes the resistance at that point. So understand your levels between 200 and 300, which will be 1, 2, 3, 5, and 8. So once you get down into, we'll put 5 in here first, so you can add under the 5. You can also add under the 8. Well, we plan to do that anyway, so we can plan to go, when you talk about group 2, we talk about 65, so 65 here. You can add under 65. If you get it closer up here, then you can add under the 72, in this case the 272. Look to build in there. So like building in down here, anywhere down here is okay, because you know that the trend is, you know, you're on your way at that point, you know. So that's that with that. And I wanted to have a look at the FTSE in the bigger picture here for a moment and sort of tie it in with the count that I've got with the S&P to a point. So I've got this here as the A wave here, then an A, B, C for the B wave, and down for the C wave to make wave A, and then an A, B, C here for the B wave, and then we're going to look coming down for the C wave. In the C wave, we're looking for 1, 2, 3, 4, 5 to come down for 1, A, B, C for 2, and then 3, 4, 5. So quite a bearish move here. We've had it as the triangle pattern, but it's really starting to fold into the S&P count. So what I can say here quickly is that you can see the price is currently above the 6.8. When the 6.8 becomes the retested resistance with that first low below the level, when that occurs, then you can look to short. That would be the safe trade. So you want that first low below the level, and then you can short at that point, because you want that particular price point, the 6.8, rejected as the support. You want it rejected as the resistance as well, so you'll further downside that point. But I just wanted to point out the bigger picture here. So the same with the US here. We're counting 5 waves down here. That will be basically we've got wave 1 down here and 2, and then be 3, 4, 5. So we'll be down here somewhere for this 5th wave down here, and then we'll have the A wave, the B wave, and the C wave coming into play, and then we'll move down. I've probably drawn that a little bit big, but I just want you to get the general gist of anything in case you're trading stocks and shares and those sorts of things. So and it's this leg over here that excites me the most, this wave 3 here, because this wave 3, if I'm right, and that's always a big if, but if we're right, then that wave 3 coming down here will be longer than this wave 1 here. I mean, that's pretty sort of gruesome, but also pretty exciting, a bit like a horror movie, really, isn't it? But shocking and exciting and thrilling, all that sort of, all the stuff what we're doing here on the planet to experience. I've got no other reason for being here except to experience things, I guess. So that's it on that side. Let's go over to the currency. So one of the things with the dollar index here is that, you know, because if the dollar's going to go up, that means that the indices are going to go down and the FX is going to go down. The euro, the pound, the cable, the loonie, the Aussie, and all of those sort of things. So what we've been waiting for here is that we kind of know that the S&P is going down, so that should put this market up, and, you know, the bonds and all the other guys all down. You know, they're all kind of in sync a little bit. So the more that we find support on top of the 300, the group 1 of 11,123 here, well, the more positive I am of more of an upside. So last time we spoke about this, we had 1, 2, 3, 4, I think we had 5 in here. We're looking for an ABC pattern. We kind of got that a little bit. It's a little bit hairy in amongst all of this, but look, if this market moves up through here and clears these tops out this time around, then we should be looking at 1 and 2. So we kind of just put Humpty Dumpty together a bit here. I think that could be too small, this 1 and 2 here. I think I might need to, I'm not quite sure, I'll put this wave 2 here anyway, because I know I'll sort of like only got to sort that out a bit, and I want to go back and check everything. But if we clear new highs here, then then yeah, well, we're going to be going up further on this 1, 2, 3, 4, 5. I mean, it could just flop from here, and you know, but if it ends up here, well, then we'll know that you should be short on the euro and the cable and the dollar, and I mean the Australian dollar and most of the other ones, you know. So based on that, looking at the euro here. Now, one of the things with the euro is that this wave 3 here is shorter than this move here. Also, we've got overlap here as well. But we could look at this whole move up here still as, you know, I've got it as corrective, but we could still look at the whole move up here as wave A up here, you know what I mean? So basically an ABC for wave A, and then over here for a wave B over here, and then a wave C up here. So we could put that, let's just put that in there, shall we, and tidy things up a little bit. So the A wave here, a B wave back here, and a C wave up here for that. But otherwise, it is counting quite, I mean, I can count it down here as an A and a B, and a wave C down to here, but I can also look at it as an impulse wave. So not quite there yet, but basically this 9,650 here, if we breach, basically if we breach this low here, then we'll be going further to the downside. This looks a little bit corrective here with an impulse. All of this looks corrective here. So I don't know if it's part of this wave 2. We're going to come back up here like the indices, you know, as an A wave, a B wave, and a C wave up here, and then come down at this point. But that low becomes significant now because that low there is that high on the US dollar. And the same with the pound here as well. We could look at all of this here as wave A, and then a B wave here, and then a C wave up there, yonder here, and have a bigger correction. That's all possible. To look at this as 1, 2, 3, 4, 5 here is a bit deep for wave 4. So can also look at it the same as the indices here as wave 1 and 2, or 1 and 2 here. But the important thing here is that we can look to short under these lows here. Okay, that's the takeaway with this. So the takeaway is markets, FX and indices can rally, but we want to short new lows. That's our gig. Alrighty, cheers.